It's really not much reaction. Jobs number 835. Let's see what that has to do. Implications for interest rates. Bitcoin under pressure. Tesla still moving higher. We'll talk about that with Gordon Johnson at 8:10 a.m. It's the end of the week, folks. It's Friday. It's pre-market prep.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders and investors. We are off to a running start, and we are unchanged at 55.90 and a quarter, waiting on those jobs number figures coming out at 8:35. Maybe that will wake up my partners here on the show. The dollar trading down 39 cents at 104.69. TLT flat at 91.69. Crude trying to get back in the 84 handle, up a penny, 83.89. Gold up 540, 23.74.80. Silver just a tad under 31, up about 9 cents at 30.93. And Bitcoin, inflation had, not inflation had, interest rates. I don't understand. Bitcoin down $4,210 at 55,615. So let's bring in Dennis and AB simultaneously. And guys, today is Friday. It's not Monday. Okay. You have a day off. We're back. It's Friday. Going to end the week on a strong note, I think. What do you guys think?
In terms of the market or our show here?
Well.
Me and AB are half asleep.
No, okay. First of all,
we can't wake up.
I was just trying to be quieter because I'm back home in St. Louis and I've got some sleeping family members. It's early here. It's an hour earlier than the East Coast. So I'm trying to be a little conscious of that. So I'm not, I see some people talking in the chat. Not tired, not hungover, but am going to try to be a little bit more subdued today.
I'm tired.
And so thank you, Bill.
Hey, Dennis, what's your excuse?
I'm tired. Just tired. Old, Joel. I got old. Somehow. I don't know when it happened. I was that young buck in the bright trading office. Feels like yesterday. Joel would reprimand me for, being that, kid coming in a little bit too loud, a little bit too sweary and cussing and doing all sorts of things. And I don't know what happened. 25 years goes by and now I got old. What happened? How did we get old?
I don't know, man. I don't know. But
kind of depressing.
If anyone should be in a bad mood, it's me. But, I just kind of put the blinkers on and say, hey, the show must go on, right? The show must go on.
It must go on, Joel.
Yeah, I lost my puppy 17 years on July 3rd. So it's a lonely household here. I have no one to discuss my trades with at all. Perry is gone. So quiet in the house
Joel.
here. Yeah, Lisa already wants to get a new dog. I'm like, man, I don't know about that. But people aren't here to hear about our pets or to hear what's going on in Aaron's house. They want financial information. And where do you want to start, Dennis?
Well, we're going to save Tesla for Gordo, who's coming on in 5 minutes here, and that's going to be a battle. And I'm going to have to wake up for that battle because obviously he's got the, I believe, $22 price target on Tesla, and Tesla is the largest position in my long-term portfolio. So we're obviously on opposite ends. So that's going to be an interesting conversation. But I think today, we had the Fed minutes, a little over macro talk here. Fed minutes came out on Wednesday, losing track of days here. S&P futures were closed when the Fed minutes comes out.
Yes, yeah.
Seems crazy. S&P SPY was open. It didn't know what to do with it. It's like, well, we don't have the futures to follow, so we're just going to sit here and not move off of it. So really the Fed minutes was a nothing burger for the market. And even the TLT was a nothing burger really too. So take it to today's action. You've got kind of the same story, NVIDIA bouncing back. It was bouncing back on Wednesday, continuing the bounce back. Tesla still leading the charge fully. Stock trading higher here. Tech, doing better here. And IWM is weak. IWM weak a little bit here this morning. probably because Bitcoin. Maybe we should talk that. We got MSTR down substantially here in the pre-market because of Bitcoin. And obviously, that's, I believe, still in the IWM, if I'm not mistaken. Yeah, Bitcoin. What's up, Bitcoin? Like, this is, I still have the hodling position that I've had in there for a while here, but holy mackerel, this is now starting to get to be a pretty serious sell-off.
Yeah, so Bitcoin went down to its lowest price since February 28. So you're looking at basically 4 or 5 months worth of gains here being wiped out, and this comes after the Mount Gox bankruptcy, which this was the first like big exchange that went under way before FTX, years and years ago. And so Mount Gox is finally going through this creditor process, and they're liquidating all these crypto assets, which is part of it, I think, is driving the price down, and part of it's just kind of the fear around it. People are selling. Oh my God, Mount Gox is liquidating, $3 billion worth of Bitcoin. I'm going to sell it too, and it's creating this kind of effect where everyone is selling now, and it's gotten down to 55,000 here. So tough run if you're in Bitcoin here, because we haven't seen Bitcoin really get back to its highs for a few months now.
It's been a really tough run, and it's been a one-way trade here really for the last month. Like, you've had a couple of pops, but not much, just kind of straight down. Like, take your Jeff Mackey purple crayon and put it on there, and it's just straight down. So, I mean, we're clearly now in a downtrend in Bitcoin. Speculation, people asking me, over the July 4th holidays, the Bitcoin sell-off, is this concerning for the overall market? I don't think it's a good thing, because we have seen Bitcoin correlated with the NASDAQ, but the NASDAQ seems to be ignoring it. So, and it's been ignoring it for the last month. So has that correlation officially broken down? Because we used to see Bitcoin having a pretty good weekend in the NASDAQ, speculative assets start to go up, tech stocks start to go up. Not seeing that. We're seeing a complete breakdown in the correlations here. I mean, Bitcoin is nothingness. When you look at it really, what do you do with it? You don't do anything. It has value because other people deem it has value. So when the trend breaks and the Momo traders want out, this is what you get. Now you get a little bit of maybe capitulatory selling here, because we've been drifting down here for a month, and now a whoosh here over the July 4th holiday. Can it bounce here? Am I a buyer of Bitcoin? I mean, I have a little piece in the long-term portfolio because I just, had the FOMO, and it was doing really well for a while. Not doing very well here in the last couple of weeks.
In the correlations with interest rates, with an inflation hedge, I guess it was an inflation hedge, right? Because it did go up. We had inflation. Inflation's been coming down. So, but now lowering rates is supposed to be good for. I don't know. It's very confusing. What we look at though is the price action, and the price action is dictating what's going on. And the other thing to note is that usually on these like weird, trading breaks, when we get like a holiday or 3-day weekend, they jam it. They jam it north, right? Less liquidity. You're working your way into a monthly bar right here that you just have to see what happens. I mean, there's no clear support in the futures on the monthly chart until 45K. Now, if it goes down $4,300 a day, we're going to be there in 2 days. But we know that's not what's going to happen. It's going to zig and it's going to zag and it's going to work its way. So let's see if we establish a level. But the move that I've had from that late 2022 low up to that high that you made in February, it's decoupling from the market right now. Now, is that a good thing or a bad thing? We'll just have to, we'll have to wait to see how that plays out. Manuel Costa says a double top on the monthly. I do see that, Manuel, but we're more about buying the dip. We can look at the chart and say, well, it made a double top. Everyone wants to buy Bitcoin. So let's see if we can find an entry point in Bitcoin.
I do see our guest hiding in the background here. So I think without further ado, we can get into a little bit of Tesla talk.
Yeah, we've got Gordon Johnson hanging out backstage, a recurring guest here on Benzinga's Pre-Market Prep. So without further ado, let's go ahead and welcome Mr. Johnson on the show.
All right. Good morning to Gordon Johnson. You all know him from GLK Research, joining us here on Pre-Market Prep. Gordon, how was your 4th of July?
It was great. Can you guys hear me?
We can hear you. We can hear you loud and clear. Thanks for joining us here ahead of the big jobs number. Let's just get right to the stock that we want to talk about, that you like talking about. Tesla, getting all those losses back for the year. Give us your short-term interpretation of what's going on, perhaps a little longer term, and then we'll throw some questions at you.
Yeah, hold on 1 second, guys. Sorry. So effectively with Tesla, what you have is a company that, you know, I think that Elon Musk is promoting a lot of smoke and mirrors to hide the fact that he owns a car company with declining margins, and basically has went X growth. Um, you know, let's start off with the robo taxis. So if you simply go on YouTube and look at videos, you'll see that with these robo taxis, literally, they're driving around, and within an hour, without human intervention, these things would be crashing. So they're nowhere near being robo taxis, despite the fact that that's what everyone calls them, because Musk calls them that. The reality is there are real robo-taxi companies in the US and China. And one thing that all of those companies have, these are companies that have robo-taxis on the road right now, is they have visual sensors that use LiDAR. And by the way, all of these businesses lose money. The robo-taxi business is a loss-making money pit. Google, via their ownership of Waymo, loses money, $2 billion roughly every year, based on, disclosures. So it's not a great business. But the problem is Tesla's cars do not have the LiDAR sensors. So Elon Musk has sold, 8 to 9 million cars. And he said they all have the hardware necessary to be robo-taxis. So if he really wants to have a robo-taxi, he follows what everyone else who's successful and is doing this is doing. He's going to have to retrofit those cars. I think that would cause the largest lawsuit in the history of capital markets. So they're nowhere near being a robo-taxi company, but that's the reason they're valued, at 100 times earnings when, typical automakers trade at 6 times earnings, because people are giving them credit for something they haven't achieved. And then if you look at the robot side, right, these humanoid robots, I mean, this is, again, something where, has been in the market for years. Humanoid robots have been in the market for decades. And we don't even know if humanoid robots are the real answer, because in a lot of instances, you're looking at specialized robots that really solve problems. So I think that what's happened is you had Musk win the vote to get, his $55 billion pay package. People saw that as a positive because some people were saying that Musk would leave if he didn't get that pay package. There's no way Musk will leave Tesla, in our view. He uses Tesla as his own personal piggy bank. There's no way he was ever going to leave. And keep in mind, he's going to have to sell shares to pay for taxes on those shares he got. So that vote passing was not a positive. And then, the delivery numbers came in slightly better than expected, but again, still down year over year. And the question again is, how are they achieving that? They're achieving those deliveries by offering 0% financing for 5 years, which works out to roughly a 13% discount on the car, and cutting prices. So you're talking about, loss-making sales. They burnt $2.5 billion in free cash flow last quarter. We think they're going to burn more cash flow this quarter when they report 2Q. So I think the stock has gotten way ahead of its skis on things that aren't fundamental. And, we've seen this before with Tesla. And I think, as reality sets back in, I think the stock will, take another tumble.
What about when interest rates actually start going down? Because, obviously we've been in a higher rate environment here. None of the auto companies are killing it, but they're holding up fairly well. I mean, EV, they've backed off on to a certain extent. But what about if interest rates actually do start going down towards the end of the year and into next year? Doesn't that help Tesla?
No doubt it would help everyone, and not just Tesla, everyone. But here's the problem, right? What a lot of people seem to forget in these crazy times. So if you look at from 2000 to 2002, right, when the NASDAQ index fell from its peak to trough roughly 85%, over that entire time frame, interest rates were going down. Basically the Fed was cutting rates. So you had interest rates going down and, the Fed cutting rates, and yet stocks imploded. So, the problem is when the Fed actually has to act on interest rates, it's probably going to be because we're in a recession. And I think a lot of people have gotten detached from the fact that, the Fed doesn't have a magic pen or pencil or a magic wand where they can just all of a sudden fix the economy. And so I think that interest rates going down will not serve as the magical pill that I think a lot of people think they will. Does that make sense?
Yeah. What about the energy business here? And there's been a lot of talk that the recent run up may not have been, just because the delivery numbers weren't as bad as the market expected, but because they were showing obviously energy storage numbers, this business starting to come around here for Tesla. I mean, they obviously have, a lot of businesses, or they're trying a lot of different things. There's no doubt about that. What are your thoughts there on the energy storage business here?
Right. So they're not trying a lot of things. This is just it's something that the media talks a lot about, but the reality is over 90%, and in some quarters, 95% of their revenues come from selling cars, and it'll be the same in 2Q. Over 90% of their revenues will come from selling cars. There's no doubt the energy business is improving. It's because I think that you had a lot of pull-in demand in California. We're seeing it in the California Solar Initiative data with respect to NEM 2.0 installations basically happening. Once those peter out, if you look at new installations in California, they're extremely weak because incentives were taken back, are basically eliminated in California. So I think this may be a blip, but clearly with Tesla, the overwhelming majority of their revenues come from selling cars. And that's a business where margins are declining. They burnt $2.5 billion, the most ever in free cash flow last quarter. And their X growth. Again, everybody's excited on deliveries because they beat. By the way, keep in mind, at the beginning of this year, right, the street estimate on their deliveries for Q2 was 555,000 cars, right? So they did 444. But that's because the street has drastically cut their estimate. And it's a negative year-over-year growth number. So again, I think that this company is being valued primarily on, robo-taxis and humanoid robots. And I just explained why in robo-taxis, they don't even have the technology to do robo-taxis because they eliminated LiDAR when COVID hit. And with humanoid robots, it's like they're like a freshman class, level of technological advancement versus the leaders out there. They're the experts will tell you they're at least 10 years away from even having something that's feasible to sell to the market. So these are like, fantastical, fantasy stories that, again, I think Musk is using to provide smoke and mirrors for a core business that is deteriorating. And that includes energy. They acquired Solar City. They made all these promises, and they're, they don't even report, actual megawatts installed anymore because they basically ran that business down into the ground. So I just think it's another smoke and mirrors thing to try to keep your attention away from the deterioration in their core business.
When does the stock respond to your thesis here, Gordon? When does it actually start to, what is your price tag? I think it's $27.
Well, the stock went from 400 to 100, right?
Yeah.
And then you had the Fed do, last year, essentially what caused the stock to take off was the Fed came in and bailed out the banks. It was basically quantitative easing light, and every single stock took off. And keep in mind, this year when they reported those Q1 numbers, grossly worse than anybody expected on deliveries, cash flow, you name it. And that's when the stock took off, right? And it took off because a number of things, but the most important thing was Elon Musk said we're going to do a robo-taxi day in August, right? So that gave people all this excitement around something that they've been promising since 2014. He did the battery day a long time ago. None of those promises came to fruition. The 4680 battery that they're making, by all intents and purposes, is a joke to anybody who knows about batteries, right? When they did Cybertruck Day, right? The Cybertruck was supposed to be, a revolutionary vehicle. It was going to be, under $50,000 and have, over 300 miles of range. That hasn't come to fruition. What about the semis, right? They've been promising semis. My point is, they announced these days, quote unquote days, if you will, I think, as pumps. And then what happens is the days come, whether it's robo-taxi day, AI day, Cybertruck day, and it's a massive letdown. And I don't think August 8th is going to be any different. But, I think he puts these days out there to give people things to talk about, again, as a smoke and mirrors to a core business that is declining. I think that you guys will agree, whether you're bullish or bearish on Tesla, their core business is in a state of decline, be it revenues or growth. And yet the stock is valued at 100 times, over 100 times, forward earnings when the auto industry trades at 6 times. I don't think that's sustainable. And I also don't think that, I think that suggests you're not having real new institutional money coming into this thing. I think this is retail flows. And I think that's very hard to continue. There's clearly the stock is massively overbought looking at the RSI. I think that's very hard to continue given, the fundamental business is in a state of disarray.
Is there a problem, and I think, I'm with you on Musk, timelines, he's always been very aggressive with timelines, and he's always, talked up the stock a lot more, and then he misses those timelines a lot. He's talking about, full self-drive here, end of this year, early next year, robo-taxi fleet coming here, and I think the timeline is aggressive as well. But when you really look, where Tesla was 6 or 7 years ago to where it is now, I mean, they were making cars in a tent 5 or 6 years ago, and it wasn't that long ago. And obviously now I drive on the road and there's Teslas out there. I mean, they have come along. Now again, to his timelines, maybe he wasn't even close to hitting his timelines, but when you look at where Tesla was 5 years ago to where they are today, don't you think maybe 5 years from now, maybe this full self-drive, these humanoids actually could be a revenue source for Tesla? What if they are? What does that do to your thesis?
No, you're not hearing what I'm saying. You cannot listen. I'm not the expert here, right? But I do talk to experts who know more about full self-driving. They forgot more about full self-driving than any of us know. And let me be very clear here. Everyone who has a robo-taxi on the road, a driverless car on the road right now, uses LiDAR. Tesla does not have LiDAR. So let me be very clear here. Tesla's whole story and the valuation is built off a lot of these what if, right? You guys, I'm not picking on you guys, but the bulls on Tesla have been saying that for decades, right? For over a decade. What if? It's always been eventually they're going to have robo-taxis. They will not be able to achieve more than level 2, which is essentially lane assist, which pretty much every car has, drive, ADAS, unless they have LiDAR. So that means they're not going to have a robo-taxi without LiDAR. That is the unanimous decision, the consensus amongst every expert I talk to. So there is no what if. The only thing that they can do to achieve robo-taxis is LiDAR. With respect to humanoid robots, Honda had a humanoid robot 10 years ago. There was a story yesterday about a Japanese robot company using a humanoid robot to use a saw to cut through items. Humanoid robots are not necessarily the answer. Just because Elon Musk says they are does not mean they are. Humanoid robots have been in development for decades. What companies who are actually profitable use and have used for years are specialized robots. So again, it's this perpetual what if. Let me explain the problem here. Here's the problem with Tesla, right? So think about it, right? NVIDIA stock went gangbusters, right? It went to levels that nobody thought was possible. But here's what happened with NVIDIA. NVIDIA is growing revenues significantly, right? They're not X growth, they're exponential growth. Their margins are through the ceiling. You're talking about margins that nobody else has, right? So that is a reason for new institutional money to come into the stock, even if one can make the argument that it's overvalued. With Tesla, you have a company that's burning now billions of dollars every quarter, whose deliveries have gone negative despite the fact that they're cutting prices and offering 0% financing. That 0% financing, I just want you guys to understand, that's a de facto price cut because Tesla has to essentially pay the bank for that 0% financing because as you guys know, rates are not zero. You do the math, it works out to about $100 a month over 5 years on a $43,000 car. That's a 15% discount. How they account for that, I don't know because Tesla's accounting has baffled many. But my point is this, Tesla is not NVIDIA. They're not growing and they're not generating cash flow. Now, here's where the bears, myself included, made their crucial mistake. COVID was a godsend for Tesla, and let me explain why. what happened with COVID is you had a massive auto parts shortage. You guys remember this. And if you want to understand how massive it was, used cars were selling for more than the new car equivalents, right? That sounds as crazy as it sounds, for lack of a better word. Why was that the case? Well, any auto company, you could call up any automotive IR and ask them, if you qualify in a new chip into your car, how long do you have to test that chip before you'll put those cars on the road? And they'll tell you roughly 2 years. Why? Because you have to test it in cold environments, hot environments, and make sure that those cars are safe. So because chips were in shortage, car makers essentially didn't have new cars. What did Tesla do? They were qualifying in chips in 2 weeks. They removed LiDAR. They removed parking sensors. They removed sensors from the steering wheel. So Tesla had cars available when no one else did. So what did that allow them to do? Right? This was all because of COVID. It allowed them to jack up prices of their cars and say, we're a tech company. But they weren't a tech company. They were just an automotive company willing to sell you cars with new chips and take things out of cars that other automotive companies weren't. Does that make sense? Do you guys understand what I'm saying there?
Talk about your price target too. Like, so how do you come up with the $27 price target? I'm just curious.
Yeah, it's very simple. I take what I think Tesla is going to earn in 2025 and put a 20 times multiple on it. Automotive companies trade at 6 times. So one could argue that my price target is aggressive. And look, like, it's easy to say, okay, the stock's at, wherever it's at today, 230 or 240 or wherever it's at, and he has a $20 target. But I had a $20 target on First Solar in 2009 when the stock was 250 and it went to 12. I had a $5 target on Tilray when it was $300 and it went to $1. It went below $1. So the idea that stocks can't fall to reflect true valuation has been disproven over and over and over again. I had a $50 target on Solar Edge recently when it was like close to $400. It's like in the 30s now. So,
you've always had aggressive price targets. We know this, and
Yeah,
you know
that's for
what?
sure.
And you've
That's
made
for
some
sure.
they're not.
fantastic
I don't
calls.
see them as aggressive. I see them as appropriate. It's just we're in a market where you have a Fed that's just pumping money endlessly into stocks, and the inflation that everybody says we're not getting, you're seeing in stock prices. But Tesla is not Nvidia, because Nvidia has 50% plus margins and exponential growth, whereas Tesla's operating margins are 5.5%, and they're burning cash every quarter. And like, the reason why I went through that story about what happened in COVID is because that's not going to repeat. You're not going to have an auto parts shortage anytime soon. And barring a shortage, you're not going to get an increase in Tesla's fundamentals. And the only reason so my point is, over the 2020 to 2022 timeframe, there was a real fundamental case for Tesla because their sales were growing and their margins were improving. And Elon Musk sold that as, we're a tech company, and that's why this is happening. What I'm telling you is, it had nothing to do with tech and everything to do with our view, them skirting auto safety rules and removing critical functions from their cars that I believe has made them less safe. But because they had cars available, they were able to jack up prices. If that doesn't repeat, their fundamentals are going to continue to disappoint. They just extended the 0% financing in China through the end of July.
Hey,
Right?
Gordon, we are coming up against jobs number here in about 15 seconds. So
Yep.
I really appreciate you coming on, and we'll be keeping an eye on the
Great
price
arguments from the
action.
bear
Yep,
side.
and duly
Nobody argues
noted.
the bear side better than Gordon Johnson.
You got it. But we got Gordon. Thanks for coming on. Have a great weekend. I appreciate you coming on. We'll be dialing you up again real soon. So
Absolutely,
thanks.
guys. Thank you.
Thank you. All right, we're getting to the jobs number. Can you do a preview in 4 seconds? Probably not. We are trading up 3 handles, just bouncing around. Okay, well, we're getting all kinds of price action here.
200,000, 4% unemployment rate. That's the expectation. Let me get we're still waiting for the actual numbers to come in here.
In line looks
average,
good enough for this market. And over 5,600 we go. The trend continues.
U.S. unemployment rate 4.1% versus versus the 4% estimated. So that is higher, coming in hot. The unemployment rate hourly earnings for June were 0.3% versus 0.4% versus 0.4% prior. So that is falling the hourly earnings. The unemployment rate again ticks higher, which is, I guess, are we in this bad news
Yes.
is good news, Joel?
Yes. Yep. If that's exactly what they want to do, they want to slow down this economy. They want to drive us into a recession. So the recession comes so they can lower interest rates, going right back down to 0.5%, even less. Why don't we take it down to zero like Japan? But that is what the market wanted. That's what the expectation was. You got a little knee-jerk reaction to the downside. You took out the low by just a few ticks, poked your head above 5,600 for the first time ever. Nothing up there. If I tried to give you resistance, I wouldn't be telling you the truth. I will just say what I'm going to be keeping an eye on the downside. The main thing besides that low for the session is that closing price from yesterday at 55. Well, that would be Wednesday at 55.90 and a quarter. That is our all-time closing price high. So we will keep an eye on that. I'm trying to look at the stocks, and I see the S&Ps moving. I don't see a lot of action in the stocks. I don't see Microsoft moving a whole lot off this. Let me readjust the chart. What did you say about the wages?
Wages went down slightly. So it was hourly wages had 0.4% growth last month. It came in at 0.3%. So that's one of the numbers that the Fed is actually watching, because if wages are increasing, that is then thought to then be kind of brought down to inflation. People are going to be spending more money. If hourly wages are falling, then people have less money to spend, which should help rein in inflation. It's kind of like a leading indicator for inflation as the economists view it. So that's good news for inflation. Again, that hourly wages fell. Not great news for our pockets if you're trying to, get a raise and people are getting paid less. So either way here, it looks like the market is reacting positively to this news here, to this data this morning.
Yeah, I mean, and basically you've had a bullish thesis that is that thesis is that eventually the Fed's going to cut, and what we want from that is unemployment to go up. So far we have the Goldilocks scenario. It's just the point where, and I think Gordon made this point too, is that when the Fed does cut, does that signal, okay, yeah, oh, now we're convinced we're going into a recession, and that everyone's hoping that they're not going to do it too late. I'm looking at some of the stocks moving here, not deterring Tesla here. That's making the highs of its pre-market session. Apple's just trading in the red here slightly, but that's just trading right up. That made a new all-time high on Friday. JP Morgan is taking this with a grain of salt, but we all know what a 4-day run that had, coming off its stock buyback. I don't know if they increased the dividend as well. Let's see how Goldman Sachs is reacting to this one. Goldman Sachs is up $2. Wow, that is knocking on the door of an all-time high, 471.31. So there we are. And what do we have as far as catalyst goes? Well, I believe we don't have, do we get our inflation data out next week? I believe we do. I believe it's a little bit later in the week. So right now, this is not doing anything to upset the bullish momentum in the market. If you're short, well, you're short. If you're trying to get long, well, pick your entry points. I'd look at your stocks in relation to where they're trading, in relation to Friday's high. If they're trading above that, perhaps use that as support. Not giving a lift to Bitcoin here, very much. That's still trading in the red. I just think boom, TLT is liking this news too. That's trading up 62 cents. Starting to get a little bit of a fade here off that 56.05 high. People just looking at that and, well, if we ever hit 5,600, I believe that was Mark Chaikin's target from, we spoke to him earlier in the week, maybe a little quicker than he expected. But right now, Bulls still in control after that, after jobs number.
Yeah, and the so non-farm payrolls, we did add more than expected. So the expectation was 191,000. We got 206,000 new non-farm payrolls. So it's kind of a mixed bag here where the hourly, I'm getting corrected in the chat, which this person is right. The hourly wages didn't fall. The rate of hourly growth or hourly wage growth fell, and it came in below expectations, which was my point. The market was looking for 0.4%. It came in 0.3%. So it fell month over month. The actual wages didn't decrease. They still grew, but by less than expected. And you did get more jobs added than expected. So kind of a mixed bag here where you had the unemployment rate increase, but we added more jobs than the market was looking for. The wage growth was slightly cooler than what the market was looking for. So all around kind of a mixed bag here in terms of the data. Then Joel, you are correct. Next Thursday, we will have CPI data on July 11th. So big jobs number this Friday. Next Thursday, we will have inflation data. So we're going to have some, some things to look at in terms of will the Fed be able to cut rates or not. Should give us some inkling, some insights into the health of the economy here.
Yeah, that CPI is coming out on Thursday, and the PPI on Friday. I mean, the only thing, just looking at, the overall market and, when they take these numbers, the one thing that probably will have me a little bit cautious going in to that CPI and PPI prints next week is the rally that you've had at crude here in the month of June. Huge appreciation since that June low at $72. Now, when they factor in though inflation numbers for crude, that could have an impact. But so far the market is still maintaining a bid here, though leaking off the highs just momentarily. What I said before, and I'll stick with that. Let's see if they can keep this market green. That all-time closing high on Friday at 90 and a quarter. Yesterday's high was right, or excuse me, Tuesday's high, right in this area as well. So far so good here on this Friday. You can't blame any chaos or any big decline on that jobs number. We had uh, the Fed minutes too, coming out on Wednesday. That kind of like, hey, we're just still wait and see attitude. So we will. You want to move on here? I don't think there's really too much else we can say. Is there any comments in the chat that we want to address regarding this jobs number, or ready to move on to some other issues?
No, let's move on to some other headlines. So one that
I'm
we
back.
haven't gotten to yet is Macy's, which is trading higher this morning by about 7%.
We got Dennis back here to give us. Sorry, Aaron.
That was a pretty big movement there. A lot of chop on the number. Originally, actually, the TLT dropped and then popped, and now it's dropping again. So they're chopping up. They're not really realizing, or they're not really, got a feel for, where they want to take this. And to your points, Joel, stocks kind of stuck deer caught in the headlights, weren't really moving much because the chop and the volatility will, have less liquidity in the stocks at this time. So they're like, well, I don't want to go lift an offer on this thing and then I have no bids to hit. So stocks kind of sat still to a certain extent here. It was definitely not the kind of number that was like, oh yeah, we're going, or oh yeah, we're selling off. Initial little sell-off, and now we are leaking here a little bit. But remember the TLT lie detector. Keep an eye on that one. It is still trading up. It was around 92 before the number. Actually, if you bring up the TLT chart, then it dropped to like 91.5. So it actually went red. And then they brought it up to 92.5. So it was a wild first candle. I see 93.5. I don't know what that is. That's an old candle. That's from a previous day.
That's one of the 3 o'clock prints there.
Yeah,
Wow.
you can see what I'm talking about. The TLT range was wild because I had the TLT on the screen, and when I'm trading these numbers, I'm only looking at that because it's going to respond the best. So that's how I'm getting my indicator. So originally it looked like, oh, they don't like it, and they're hitting the TLT, and then boom, boom, boom. No, like 10 seconds later, they started ripping it higher here. So definitely, was a number where a lot of confusion, really, just, a lot of, indecisiveness, I'll say, on that number from traders. And we're kind of right back to where we were.
I know.
All that chop, and it was choppy there for a few minutes, and we're kind of just settling back to where we were. IWM is up, though, and TLT is up a little bit. IWM is up about $1 from where it was. So if you're looking, at the silver lining here, IWM small caps are catching a bit off of this. You were
All
going
right,
to go
well,
to the
should we move
Macy's
on
story.
from these numbers, get back to I was going to do the Macy's story real
Sure.
quick. So we had an update in the bid there. This is kind of like we were talking about the show Deal or No Deal a couple shows ago. This is, I mean, we know the deal is we've had the offers, but I thought I was under the impression this deal was already like going through, but Macy's shares are trading higher after Arc House and Brigade raised their offer for the retail company to $24.80 per share, up from $24 a share. So I think that brings it to around like $10 billion here for the acquisition of Macy's.
Again, this is just, they've been trying, this investors group trying to buy Macy's here for a while. They were at 21, now 24, now going up to 24.80. Stock market not believing there's going to be a deal. I've actually played this from the long side a couple of times here. I haven't been playing it lately because I don't want to get caught if they just back off altogether, because then I think you have the fall. And the other issue we have is retailers haven't been doing very well. Kohl's has come down substantially. Nordstrom's held up because there was rumors that was going to go private too. There seems to always be rumors about Nordstrom going private. But Macy's stock chart, not really, sitting up, where you would think it would be when there's a 24.80 bid on the table. You're at 19. So you think, ooh, risk arb, situation here. Obviously, the market's saying we don't think there's going to be a deal. We think there's a possibility of a deal, and that's why the stock is up $1 today. But if they really thought the deal was going through, the stock would be $21 or $22. So I think Macy's just, it's a tough situation. I've already been burned in this once, playing Kohl's when I thought Kohl's was going to get bought, and then it didn't get bought, and I got killed. I think, if Investors Group pulls out, Macy's could be down at like $16. So there is some downside here. Like some people say, well, the value's there, and Investors Group sees it, so why not? The dividend's nice too at 3.62, but the core business is not doing that great. We know the real estate has value. Obviously, Investors Group, has something that they have in mind for it as well. They wouldn't keep raising their bid, but if they decide, no, we can't work with this board, we're not going to get a deal done, they pull out. I mean, it's not out of the realm of possibility it could be $16, $17. So I kind of see $3 downside from 19. And I see about the $3 to $4 upside if the deal goes through. So traders are just like coin flip territory, deal or no deal. We were talking about this on Wednesday.
I did get a little reaction. Now, you did have a deal, the private sector going through here, right? With Needless Markup and Saks Fifth Avenue. So a little bit of consolidation. But this is not a consolidation. This is an outright acquisition. So Street still showing it's not agreeing with it, not agreeing with the Wall Street Journal here. If you're looking for, as far as the charts, a daily high, your next daily high comes in at 2014. Coincide just under the pre-market high is 1953 here. So if you're looking for a pop in this, I mean, I guess that you just have to rubber stamp it and say, yeah, this is the deal. We're going to court. We're signing the papers. But so far, not seeing that at Macy's. You did mention the Kohl's. That hasn't been able to catch a bid. What else? Everyone's been going to Walmart, right? Walmart consolidating near all-time highs here. Costco consolidating near all-time highs.
I mean, you have
Target.
the tale of two markets here, Joel, and you're going from Macy's to Walmart, which are completely different businesses here now, where Costco, Walmart have been absolutely killing it, retail. I mean, and this is, again, you look at a Costco and Walmart where you go do your grocery shopping, where you buy everything. When you go to a Macy's, you're going there mainly for apparel. I mean, that's what it is. It's high-end apparel. They sell some perfume. Yeah, they sell some other stuff. But I think, you're just in this, like, Costco and Walmart are the necessities. Macy's doesn't sell anything really that is a necessity. And for the necessities, the middle class and the lower class go to TJ Maxx. So I think, why do I want to own a stock like Macy's, Nordstrom, these high-end retailers that are selling high-end apparel? It's not the economy for it. And it's just not, it's secular trends have just changed from, spraying yourself down with perfume. I mean, think about Macy's and the huge perfume section these things have. People aren't wearing, AB, you're young. This is a good conversation for you too. People aren't wearing cologne and perfume like they were 30 years ago. I mean, are they? I don't see it anymore. I don't walk through, and smell people. I think people are more sensitive to, everything else. I just think, there's a huge business where Macy's is just not adapted to the times. Like Kohl's, is a little bit different. It's a little bit of a cross from Macy's and TJX. But, Nordstrom and Macy's, they just haven't, adapted their businesses to change with the times. And, and I was in a Macy's and, they're coming out, oh, smell the cologne. You go and there's people and they're trying to sell you the cologne. They're spraying the air and they're spraying it at you and stuff. And I mean, people aren't into that as much as they used to be. Sure, there's always going to be some people that wear cologne, but the younger generation isn't wearing, cologne and perfume as much as they used to be. So I just think like there's a reason Macy's has been a dog for a very long time. And I think the only reason for upside in this stock is if it gets bought. And that is a good reason. I mean, there is definitely a bid out there and it may get bought and maybe get taken out at 23, 24. But in the event that investors and this investors group walks away, where is the stock? What do they have? Yeah, we can say the real estate has value, there's so much value here, but this has been a value trap for 7 or 8 years. If you put your money back in Macy's 8 years ago at $20, it's still $20. If you put it in there 7 years ago, it was at 40 and you're down significantly here. This is a hard stock for me to just wrap my head around. I really like takeout, when I'm going in for a takeover play, it's a lot better to have a company that's just kicking ass and taking names as opposed to like, well, there's value here. It's so beaten up that it's value, because you know what? The value traps around this market are very plentiful. Everybody's silent on that. So I guess they all love cologne. Everybody's saying in the chat they still do. I don't think I see it as much. Maybe I'm wrong. But you know what? As much as I'm wrong, and I can go on a rant here, as much as I've been wrong about, maybe everybody's gonna, nobody's driving an EV, nobody's taking a robo-taxi. This is what we've learned on the show. Nobody's gonna ever have a robo-taxi, nobody's gonna ever have a humanoid, and everybody's gonna wear cologne and perfume. If you think that, go short your Tesla and buy your Macy's. Maybe it's gonna work out. Maybe it's gonna work out. I'm on the other side of the trade.
I think people still do. I would say, especially younger people. I feel like honestly seeing more and more of that, but I don't know how big of a business line or revenue stream that is for Macy's, or if it's just what we think of Macy's, because when you're walking through, you have that. But that's what people have been saying for years about Macy's, is it's just a real estate play at this point. But how valuable is those spaces in malls? Because the malls don't have the same foot traffic that they did 10, 20, 30 years ago. So how valuable are those malls?
A hell of a lot less. You're making a fantastic point. We've argued that point on this show for 10 years. This isn't like we just got bearish Macy's last week. Aaron, that's a fantastic point. They want to keep saying how valuable this real estate is. But people aren't going to the malls like they used to. Is it really that valuable? The market says, hell no. Well, I've learned one thing from 25 years of trading. When the market says hell no, I listen. That's what it says on Macy's. Macy's trading $19. It's $24.80 bid on the table. I mean, there's a disconnect here. And a lot of people say, well, I'm just going to buy this, a no-brainer. Well, I got burned in Kohl's that way. So I think you make a fantastic point. This real estate that everybody keeps saying Macy's is worth so much. And they were saying this when the stock was $30. The stock is 19 here now, 3 years later. What's the time value of money, even if the stock was flat, but it's down over that course of time? It's hard to just get on board here and just say, yeah, this is a no-brainer. This investors group thinks it's worth $24.80. I'm going to buy it too. And the market is doing that. But I just think there's got to be better opportunities than investing in real estate that isn't as valuable as it was 10 years ago, and a bunch of, high-end apparel and perfume. I just don't see why.
Yeah, and you look at how people are spending their money in terms of retail and clothes and stuff right now. You look at like an Abercrombie and Fitch and its return this year. It's not because people are going to their mall stores. It's not because their mall stores are doing well. It's because they're selling direct to consumer on their websites. And so I think, like someone in the chat just said, I go to Macy's, I'll smell some of the perfumes there, and then I'll buy it online for less. So even the people that are using the Macy's samples or whatever aren't buying it there. At least some people are. So, again, like if I was going to play the retail space, I'd be finding brands like Abercrombie and Fitch that are growing and selling direct to consumer as opposed to these mall plays. Because I mean, I've been to the mall a few times in the past year, and it's again not what it was 10 years ago. It's not to say I think people were quick to kind of write them off as completely dead, which maybe isn't true because there still is like foot traffic at, in Michigan at Somerset, but not to the extent that we had years ago. And that was really a trend that predated COVID. I mean, COVID, I think for a lot of malls was probably the nail in the coffin. But really, a lot of those trends and e-commerce growing, that was a thing that was happening long before COVID. And so, maybe just something that we saw sped up during the pandemic, but not caused by the pandemic necessarily.
We apologize for the ads. I don't know what's happening, like why we're getting ads in the middle of. Obviously, I don't know if we can control this or not, but AB, the chat's going nuts on the ads. We don't want ads in the middle of the live show. At the beginning of the show is fine. At the end of the show is fine. We will try to figure that out, and we apologize for that. Back to this conversation, AB, it's just fantastic points. You're making fantastic points. And I think, if you're buying a stock just because there's a takeover bid there, I think you can get burned with that. And I think it's a 50-50 coin flip. I just said 3 points down, 3 points up. So I'm not saying it's a bad investment necessarily. It might get this takeover. But if this group walks away, I think Macy's stock is a lot lower. And there's just so much like competition, to your point, even if you like perfume, even if you like cologne, and you're going there and you're smelling the stuff. And then, how many people are buying it there? So, I mean, the competition is just so intense for a Macy's and a Nordstrom. It's hard to see the turnaround stories here. It really is.
Oh, Joel, we got you on mute.
Joel's still on mute. He's trying to figure out how to unmute himself. But Joel, you're still on mute. This show is going off the rails here. Ads and muting. So Joel's got himself off mute here now. So we'll get his conversation. I don't know why it's toggling back and forth with him. So we got some problems here. Let's move on from Macy's talk here. There's other stocks moving here. Broadcom's up another 14 points here today. The pre-split trade. I mean, sometimes trading, just forget about the fundamentals and just go simple, Simon. And you're starting to see the stock's going to split in a week. It's got the 10-for-1 coming. We saw what NVIDIA did ahead of its split. So, I mean, now it's up $150 here in the last few days. You just got to own these things way ahead of the split, in my opinion. I mean, now it's run up. You need a pullback here. You're chasing it a little bit, but that 1,600 consolidation on AVGO was a gift. Obviously, we're getting the Pelosi pop here, too, because it was found out on Wednesday that Nancy Pelosi took a big position in this as well. That's following through. So a lot of wind in the sales of AVGO here right now. Throw it back to Joel to give us some technicals.
Well, we'll get back to Joel in a second, it looks like. But in terms of Broadcom and Nancy Pelosi, her call options, I mean, what was the last one? She did it on Palo Alto and actually mistimed it. Like she bought calls on Palo Alto and then it dipped. A lot.
She was early.
How many in a row do you think she would have to like miss before people just stop? You know how like now we don't really care about when Cathie Wood makes a buy or sell anymore?
Yeah.
I mean, if this one doesn't work out, because it seems like timing wise, the time to buy calls on Broadcom was like 3. Well, and do we know, Dennis, exact? Because I don't have the info pulled up right in front of me. Do we know when she put that trade on? Did she buy the calls like 3 weeks ago? Or
I don't have it in front of me here either, but I think it was recent. These trackers, these people who track this, is pretty quick. So I think it's within a couple of days. I don't think it's like 3 weeks ago. I think it's within a few days. And she took a position in NVIDIA too. And don't kid yourself. Like, there's certain things that just move stocks, and the Nancy Pelosi, whether you believe in her or not,
did, yeah.
It turned NVIDIA around too. NVIDIA was sitting down near, just kind of consolidating near the lows, and we found out that she took a big position in NVIDIA as well, and that popped on Wednesday too. So there was 2 stocks, NVIDIA and AVGO, she took positions in, both had significant pops. So whether you believe she's a fantastic investor or not, you got to know the short-term movement. When you find out that she's taking a position, it's gonna be higher.
Yeah, it 100% moved the stock. Tennessee is saying Pelosi always has insider information, which, look, that's true. And then we also had people across the aisle, Marjorie Taylor Greene, also bought shares in Broadcom around the same time. So, like, people are making funny headlines and stuff, being like, oh, the one thing, the Republican and the Democrat Congresswoman can agree on is they're both buying this stock. But when I saw people writing this stuff about, like, insider information, And you got to remember too, Pelosi's husband is an investor. This is what he does: is he trades stocks. He's an investor. When people were talking about, oh my God, she's buying NVIDIA calls, she knows something we don't. It's like everyone was buying NVIDIA calls. It's what like everyone in Silicon Valley that was investing was doing. You know, it's like that.
Yeah.
That to me was a little silly.
It's a
like
reach that
it's
she
a
has all
reach.
this information that we don't. It's a real reach, that whole argument. I'm with you.
Because again, it's like if you aren't like I guess privy to the Nvidia story at this point and what's going on with AI, like you don't need inside information to understand that thesis. She was just doing something that again a bunch of other investors on Wall Street were doing, and her husband again is a professional. So it's on both sides that you have people, and I'm in favor of legislation that would either ban or severely limit these elected officials' ability to trade stocks like this, because I don't think it's right either. But again, if you look at the data and what's going on, it happens on both sides. So people try to make it out to be like a Pelosi thing because she and her husband have been very successful with it. And she's also based out there in like San Fran, so it would make sense if she had a understanding of the tech industry. But Joel, we got you back. You want to give us some
back? You got me back?
We got you back.
Okay. All right. Just looking at the AVGO, it's gotten halfway back of this move here, 1745. So there's not much in here. I would look for that pre-market high, 1760. You're going into this big red bar right here, where you came down from 1800. So big part of the S&P, big component. Let's see how it trades off the open. But so far, I'm keeping an eye on the 1708 level. That gets back half of that move and really didn't pop much during that jobs number. So I think go this one pretty much following the S&P. I just wanted to mention NVIDIA too. We talked about that getting back half of its move, and that's still lingering out there at the 129.50 area. You almost got there on Friday, or excuse me, on Wednesday when you got to 128.28.
Going back, so something I've realized, on this show, just and I can go on a little 3-minute rant here, is one way I've always approached the market for 25 years is very simplistic, where I'm looking at, I'm going to go long stock ahead of the split, and it's going to make money. I'm going to go long a stock ahead of an earnings report because of the pre-earnings run. These are stupid, simplistic strategies, but simple works in this market. And we can dig down and say, the Tesla core business not going well, and they'll never get robo-taxis, and they'll never get FSD, and they'll never get any money from humanoids, and they'll never get any money from energy storage. But you know what really drives price is story. And, one thing Musk is the master of is the story. And he makes me a believer, and I do think he has come to fruition on a lot of his things. It's taken him a long time. And his targets, to Gordon Johnson's point, Gordon Johnson is just excellent at arguing the bearish point. He's excellent at arguing his point. I told you, and we can go a couple minutes overtime here, Joel, make up for the commercials. But I told you, this like last week when you said you're going to bring Gordo on, I was like, I have no chance to beat Gordon Johnson in an argument. That person is the best person at arguing his point that exists, maybe on this entire planet. Peter Schiff's pretty good at it too. Love to see Peter Schiff versus Gordon Johnson, but I can remember watching Gordon Johnson. Whenever I see him on CNBC and going against somebody, I'm like, the other guy's going to lose because Gordon Johnson is so dominant and he knows his stuff so well. He's awesome at it. But the one thing, that this stocks that I've learned trade on, it isn't fundamentals. It isn't going and analyzing a balance sheet and trying to figure out, okay, we're going to value this and crunch these numbers. You got half the market trading at 10 times, another half the market trading at 40 times. So, it's difficult to make money in the long run as a trader. Maybe as an investor, it works out in the long run, but as a trader, sitting here and crunching numbers and crunching a balance sheet and trying to come up with your ideas. What really works is getting ahead of the story. What really works is like, I can see a story materializing here, and there's going to be a lot of interest coming in for that. That is why I'm invested in Tesla. And I do think that there is going to be a revenue stream from FSD for them. I don't think it's like he says they'll never get there because LiDAR, but we've come a long ways. It sucks that, I never really got to argue back with them, but I wouldn't have beat him anyways because it's Gordon Johnson. He's awesome at arguing. But think about where FSD was for Tesla to where it is now. When I first drove with my buddy Pete, in his Tesla 7 years ago, FSD was basically just, holding it between the lines. I was like, oh, well, keep it going, to take the corner. He's like, oh, it can't take corners. It can't do that. It does all that now. So he's come a long ways. And whether it's going to be LiDAR and he doesn't have LiDAR, well, go get LiDAR. I think Musk will find a way. I mean, look at what he's done with SpaceX. We don't talk about any of that. He's basically taken over NASA to a certain extent, on what they do. I mean, he finds a way. So if it's got to be LiDAR, if Gordon Johnson believes, well, he can't do it without LiDAR, we'll go get LiDAR. I mean, what's stopping him from going and getting LiDAR? So I think Musk, the one thing I do believe in, I also believe that when you're investing in stocks, it's about story to a certain extent and, seeing, what can come, but it's also about investing in people. I mean, Steve Jobs, investing in Steve Jobs, Bill Gates, investing in Bill Gates years ago, like these are, and then going obviously Jensen Huang to recent history. That's why I don't bet against AMD with Lisa Su. I think Elon Musk is right up there with the best of them, if not the best of them. So fairly confident to invest my money with him that he will find the people to figure it out. But FSD, robotaxis, energy storage, humanoids, George Johnson came on the show and gave them all a 0. Those are all worth nothing, is what he just said. They have a core business of Tesla that I'm giving a multiple from that, of 20 times, and it's worth $27 a share. Trough multiple because, obviously sales have been going bing, ding, ding. They've plateaued for 2 years because the economy has plateaued a little bit here to a certain extent. But I think giving all those things a 0 is not looking, not looking out far enough here. We can look in this current right now at this moment in time. Yes, FSD is a 0 because they're not making any money from it. Robotaxi is 0 because they're not making any money from it. Energy storage, they're not making any money from it. Humanoids, they're not making any money from it. But in 5 years, I tried to ask that question, and he just basically shot me down saying, none of this stuff's ever going to come to fruition. They're never going to get any money from it. I don't know if I believe that. I think Elon Musk will figure it out. And he's got some major industries he's working on. Energy, humanoids, full self-drive, whatever else he's cooking.
Well, it's just too bad to Starlink.
It's hard to give that a 0.
Yeah.
And that's what Gordon Johnson's doing. And that was what I would argue back if we didn't have the jobs number that comes in. So maybe we can bring him back sometime to talk about all this. But
sure.
I don't give all those things a 0.
All right, we're starting to lose altitude here a little bit after that jobs number. We are now trading in the red. So we did hit our high for the week. Well, who knows? We could go back up to that 5605 area, but now we are distancing ourselves, getting towards closer to that pre-market low of 85 even. Not much on there underneath that, Dennis. I mean, on that pop, I mean, does it seem... there was a quick dip, really not long enough, but when the pop, I mean, it seems like there were some patient sellers out there. What was your perspective from, looking at the market
I
off the
think this
number
is
and
just
off
not
the
a big
information?
number. I think, it's like we're in a holiday week. Liquidity is a little bit lower, but the jobs number isn't moving the numbers like the CPI and the PPI.
Yep.
We're just not moving off of those numbers as much anymore. So any hiccups we get, like the sell-off and the pop and the drop, it's like at the end of the day, it's 206,000 versus 200,000. It's just not a big number.
Yep.
The Fed looks at this number as a nothing burger. And I think the market is now looking at it as number 2. If it was like 280,000 jobs and the unemployment rate was spiking, or going down, I mean, it would have been a different story. But they're basically inline numbers. And I think the Fed really looks at this and is like, this is a nothing burger for us. We're not going to focus here. And I think that's what the market has done here now too, kind of back to where we were before the number came out.
All right, AB, you want to wrap us up here?
Yeah, let's do it. Thanks for everyone who tuned in. I know it was kind of a funky morning this morning with it being a Friday that felt like a Monday or whatever you want to call it. Hope everyone had a good 4th, though, but it was definitely fun getting Gordon Johnson back on the show. It'll be a wrap for us this week. We'll be back on Monday, and we will have Anne-Marie Band joining us, getting some trade ideas for Anne-Marie. Always fun to have her on the show. Other than that, we have live trading starting up after this, and hope everyone has a great weekend.